What's up, good people? It's your man, Investing with Cam. I'm going to do something a little different, or a little differently than my past few videos. In the past, about 2 years or so ago, I used to post videos about options trading, in which I still do a small amount of options trading. I'm trying to get completely away from options trading. That's why I'm starting to invest into uh, ETFs, more specifically AIPI, in order to receive those distributions every month so that I don't have to do any type of options trading in order to make extra income. But options trading can be very lucrative if you do it right, and you're going to lose from time to time, so to speak. But for the most part, you can make a lot of money as well when doing options trading. And so, as you can see on the screen, I'm on a stock called Newsmax, in which Newsmax recently was listed on the market. So it's only been around for about, I would say, pretty much about a month now. It hadn't even been 2 months since it's been listed, in which as a company now, it's been around since 1998, but it was just recently listed as far as being able to trade it publicly. So a little bit about Newsmax. Newsmax is a holding company which engages in television broadcasting and multi-platform content publishing that produces content publishing that produces original news and editorial content for consumers through various media outlets, including TV, news channels, digital and print publications. And so, just like it sounds, it's into the news sector of things. And once again, I'm on here because of the stability it has shown within the month that it's been on the market, so to speak. Because, like I said, it hasn't been around a long time, in which typically, let's take a stock like, let's say, Nvidia or Broadcom or even a Coca-Cola. Those are pretty stable in a sense, especially like a Coca-Cola, but it takes a lot of money in order to be able to gain a lot of money from running options on a stock like a Coca-Cola or even on a Chevron or something like that, which they are pretty stable. And so you can kind of run that strategy of selling puts, and if you own 100 shares or more, you can run the strategy of selling calls and kind of know that you're going to make your money. But like I said, Newsmax is a new stock, and as you can see, it was recently listed on March 31st. And as we can see here, by April the 1st, Newsmax was up to $233 per share. But just as quickly as it reached that point, it dropped off. And so, as we can see here, I would say around the 10th of April, which is about a month ago, it started trading in that $25 range, and it's stuck, and it's been there, I should say, for the past month. So it seems to have stabled off or stabilized. And don't get me wrong, with any stock, you run a risk when running options on them. But I want to show you what I'm doing, in which, let me go to trade here and trade options, in which you have to be approved through Robinhood or whatever app that you're using in order to be able to trade options. But once you're approved, then you can go in there and like I said, run your option strategies. And so I'm going to go to next Friday, which is the 16th. And so I'm going, as you can see, you have a buy and you have a sell. And so I'm going to be selling options, not buying options. Typically when you when you buy an option, just like it sounds, you're actually having to pay for those options. When you sell an option, you receive premium from the options that you sell. And so if you don't own 100 shares or more, you want to sell a put. Because when selling calls, that means that you own at least 100 shares of that stock in order to be able to sell a call. And as well, when selling calls, you go up, so to speak. When you're selling calls, you want to go up in price and choose a price that's out of the money, and out of the money enough to where you feel comfortable. If you don't want to lose your shares, you feel comfortable that the stock price won't go that high, so you can earn the premium plus keep your shares. And so when selling puts, you do the exact opposite when selling puts. And so when selling puts, like you see right now, the price of Newsmax is at $24.62. So personally, I feel comfortable at selling a put at $23 because I feel like that Newsmax 9 times out of 10 will not go to $23 or less. And even if it does go to $23 or less, I feel comfortable at that price and knowing that I'll more than likely be able to turn around and sell a call option in order to make my premium on the other end of things, which is called the wheel strategy. But for right now, we're just selling puts. And so if you can see next to the $23 put, there's a -1. So I've already sold one option at the $23 price point for Newsmax. And so you would just click the positive button there. And so when I get to this screen, as you can see on the first line, there's a 1. That 1 represents one option. And so for each option, there's 100 shares in each option. So with 1, I have 100 shares. With 2, there's 200 shares. And so below that, you see limit price. And so at the 135 or the $1.35, well, it was $1.35. Now it's $1.20. There's a high field likelihood, meaning that 9 times out of 10, if you decide to go with the $1.30 or whatever the bid price is, I should say, then there's a high probability that it's going to be filled and you'll receive the established credit or the estimated credit down here at the bottom. So at 130, your established credit is 129. So you're receiving $1.30 per share, meaning that for 100 shares, you get $129.96 because there's a 4 cents fee that Robinhood charges when trading. And then as the bottom down here, you'll see where it says max loss, break even, and max profit. Max profit, just like it sounds, the most money you can make is $130 or $129.96. The break even, which is subtracting the credit that you receive from the price. So your break even amount is $21.70. And your max loss is the premium, the estimated credit that you receive minus, because at 100 shares at $23, that's $2,300. So if you subtract the estimated credit from 2,300, you would get that number down here at max loss. And so that's what your max loss is, but you're truly not losing that money because you end up with 100 shares of that particular stock. And in this case, 100 shares of Newsmax. And so a lot of people like to run the wheel strategy or sell puts on stocks what they feel comfortable with holding, and which Newsmax is a company that I feel comfortable with holding, even though they've only been around for a month at this point in time. And so I'm going to go out here, and like I say, you can see where I sold one put at $23. And so I'm going to scroll down. As you can see, with that one put that I sold today, I received $135 minus the 4 cents. So $134.96 is what I actually being paid into my account. And so I received that credit no matter what. And so once I get that credit, that money is mine. And so the expiration date, as you can see here, is on the 16th, which is next week. So if Newsmax stays above $23 by next Friday, then I will receive all of the premium or all of the collateral money that I had to put on hold, which is at $2,100. I'll get that money back. Plus, I'll keep the credit that I received in the beginning, and I can continue that process on and on. I want to show you guys as well. I closed out one, so I had a put option at $21 that was going to expire this Friday, and I sold 2 contracts on that, so I received a credit of $259.92. But then what I did, because the price of Newsmax was going up as much as it has, to the point where I was able to buy back that. So when you sell a call, that's when or sell a put, you receive that credit. So I was able to buy back both of those puts that I had sold that would have expired this Friday. I bought them back for $30.08. And so I had a realized profit of $230. Basically, the $260 I received in the beginning when I sold the put, minus the $30 that it took for me to buy back my contract. So I'm still up $230 for that particular option that I had sold last week. And so I sold that, and then I bought into, or should I say, I bought back that option. Then I sold another option, which was only one today, for the $23 strike price, just because Newsmax was going up. Now, in some cases, let's say, for example, if I bought or sold a put for $23 and Newsmax went all the way down to $15 per share, I would have to, if I don't, buy back that contract and end up having to actually pay additional money in order to buy it back, and I get assigned those shares, I have to then in turn wait for the price of Newsmax to start going back up, because if it hits $15, there's a high probability at the $21 strike price or $23 strike price, I won't receive any premium at all. I'd be lucky to get $5 or $10 in premium, which for some people, they would do it. In my case, it's just not enough premium. So that's the risk that you run when selling puts, and just the same as selling calls. You could sell a call, and let's say you've got 500 shares of Newsmax and you sell 5 calls, and then at $23 strike price, and then that price of that particular stock goes up to $50. You will not get any of the profit past that $30. All that other $20 you wouldn't get, because you have capped the upside by selling that call at $30 or whatever have you. So there's some risk involved for sure, but at the same time, there's a lot of reward that can be received too when selling options. And so if, like I said, I get assigned at $23, and just based off of the small history of Newsmax, it's going to stay within that $20 price range, I would then turn around and just sell a call, because now I have 100 shares. And I would sell a call. Let's just say if I decide to sell a $26.50 call, I would receive at least $139.96 in credit for selling that one call. And then if Newsmax was to go up past the $26.50, I would then at that point have to sell my 100 shares, but at the same time I would have gotten that credit minus plus the price increase, because remember, I bought the shares at $21 or at $23. Now I'm selling the shares at $26.50, and so that would be what, $2,600 or $2,650 minus the $140 would be my increase on my money that I would get from the share price increase, because you always have to deduct that credit that you receive from the amount of money that you are either paying to buy the shares or selling the shares at. But yeah, I mean, there's a lot of money to be made. I've been selling options now for about 3 or 4 years, and maybe longer than that. And so I've had a lot of trial and error. I mean, I bought AMC when it was selling at $50 per share. And then I went and did that. And then they go and have a stock split. And it was a reverse stock split. So now they're selling at $5 per share. And now I'm stuck with these shares, and I can't do anything with them. B. Riley, I had a bad experience with them. With Carvana, I was selling puts with Carvana. I got assigned the shares. It was like 400 shares. And so I decided to sell a call option that was about 6 months out. And I received like $4,000 in premium, which I thought was good money at the time. But lo and behold, Carvana started going up. And when I say going up, it went up like a rocket into outer space, to where if I only would have just held the shares and been patient, I would have made about $20,000 in profit, because I would have been able to sell those shares at a high. But instead, I ended up getting $4,000 in premium from selling a call option. And then I turned around and bought back my options in order to be able to get out of that stock altogether, because I felt some kind of way knowing that I missed out on $20,000. But like I say, we live and we learn. It's a learning process when doing anything in life. Even the best traders have ups and downs. But the best thing to do, if you have a lot of money and you want to run options, then do it on steady, stable stocks. Like I say, a Coca-Cola, a Pepsi, Chevron. Those are stable stocks, to where they're not going to go up $50 in one day. They're not even going to go up $10 in one day in most cases. And in most cases, they're not going to go down $10. But it takes a lot of money to be able to do so, in which Newsmax is a cheaper stock, and it seems to be pretty stable at this point in time, and the premium is good whether you're selling puts and or selling calls with it as well. But I just want to jump on here and talk to you guys about selling options, in which, like I said, when you're selling a put, you want to go below the share price and choose a number that you feel comfortable with purchasing that stock at, if it happens to drop below or drop down in price. And when selling calls, you want to go up in price and sell it at a price that you feel comfortable with selling your shares of stock at, if the share price goes up. But hey, if you have any questions or comments, feel free to leave those notes in the comment section. Like and subscribe to my channel. And again, it's your man, Investing with Cam, and I'll talk to you soon.